on the pulse, knows what's going on, trusted advisor. We did a presentation last week together, and again, every time you speak Claire, I'm always learning something new, and this is going on like 9 years. So just a little bit about Claire, if you don't know her. Claire Drage is top 1% mortgage broker with her own large team of mortgage agents. She's also an elite trainer and a real estate investor herself. She's originally from England, hence the accent. She moved to Canada after 11 years in the Canary Islands, where she and her husband had a property management company and an industrial laundry. Her focus is providing real estate financing plans for her clients, access to unlimited borrowing power, cash, and ability to grow. So in her opinion, there are no excuses to achieve your real estate goals. Ladies and gentlemen, news you can use with Claire Drage.
I really appreciate it. So, how cute is that tiny home? How many people went upstairs? How many of those people are wearing skirts and went upstairs? Okay. So, one of the things that we wanted to talk about, a couple of things, is basically what's happening in the market. What is impacting investors? What's important for you to know? What's important for you to be aware of? Randy touched on it briefly about the rent control, and I noticed that not too many hands went up and being familiar with exactly what the rent control is. So basically, Premier Doug Ford introduced that if any newly built and newly occupied properties after November the 15th, 2018, this year, there is no rent control. So you're allowed once within a 12-month period to increase the rent as you see fit. So is that good news for investors or bad news? Some would say good news, some would say I don't know, it sounds good, right? I can increase my rent at any point. I think it's really important to understand from the tenant's perspective as well. Because basically, the tenant is going to be picking from two types of properties. Rent-controlled, non-rent controlled. So it is going to come down to a supply and demand. You know, a tenant might pay a higher rent to start with on a rent-controlled unit if they expect to stay in there for longer periods of time, more than 1 year. So it might sound amazing, but do you want turnover? You know, you really got to think about what your overall plan is, and really think about, you know, if you do increase the rent after 12 months by 8, 10, 12%, you know, it's again supply and demand. Is there enough tenants that are prepared to pay that? And are you going to get good tenants? How many people have had bad tenants who would take, you know, less rent for better quality tenants? That's why a lot of us will do rent to own, because it's one way of getting a good quality tenant. Now, the one thing I would add is the current government has brought this back, or changed it. All I would say to you is remember, governments change. So could this change again? Absolutely. So we've talked about rent control, everyone's cool with that. Let's talk about what's happening with interest rates. I know that's super exciting. You all want to know about mortgages and interest rates. So the bond market has rallied in the last 7 to 10 days. So we saw interest rates, you know, peak or increase over the last sort of 3 to 6 weeks. But over the last 8 to 10 days, the bond market has dropped. That's typically, if it continues that way, it would mean there is potential fixed rate drops are going to occur. The banks have already started their first quarter of their first year. Their financial year started November the 1st. So there's opportunity right now, potentially, to get those good borrowing rates for your bank. So something to bear in mind. Now that's all good news. So I have some bad news. Some of you may have heard on the grapevine that some lenders are changing, some major banks are changing how they qualify borrowers. Not just investors, any borrower. And it's all about lines of credit, secured lines of credit. So if you are making notes, what I'm about to tell you only applies to secured lines of credit. There are 2 major banks that have changed their guidelines. If you have a secured line of credit and the balance is 0 and you're not using it, they are actually going to assume that you are going to max it out and want you to qualify on the entire limit. So if I have a $500,000 secured line of credit on my home and my current balance is $100,000, 2 major banks, and some may follow, and now we're going to assume you've maxed it out. So does anyone want to know who those major banks are? Okay. So one of them is the green comfy couch, right, which has now got spikes in it, not so comfy anymore. And the other one is Royal Bank. So TD and Royal Bank are the two that have brought that in. Now, before everyone panics, are there exceptions? You know, are some of those branches based on your profile potentially going to stretch your debt servicing ratios to accommodate? Maybe. Do some of us have to convert our lines of credit to mortgages in order to help, you know, counterbalance this new guideline that's come in? Absolutely. So it's just a change in some guidelines with some lenders. It's something to be aware of. And it could be an opportunity where we're talking about fixing into mortgage rates as opposed to lines of credit, which of course, I mean, most of us are paying 4.45 on a line of credit right now. Still got variables in the twos. So sometimes it could be a good chance to speak to your financial advisor, your mortgage broker, and talk about whether it's worth converting some of your line of credit into mortgages so that you can continue to expand your portfolio. So all I will tell you is there's lots of money out there, there's no limits, and it's just about being creative, not being bad. We don't want to put anyone in jail, but there's always a way to maximize your borrowing power no matter the legislation. Just speak to a professional that knows what they're doing, and you can continue to grow your portfolio. So that was my update for this session. Thank you again so much for giving me that opportunity. I appreciate it.